Welcome to Trading Lounge and the US indices, and starting with the SP 500 here on the daily chart. In a nutshell, we're looking at the market like this in terms of wave 3 here, and an A and a B and a C here for wave 4. I also need to talk about the other counts as well. So it is possible that that wave C can be on this low here with wave 4 completed here at this point, and we can continue to move up from that point. Our target, however, for our situation for that though, is that our target to the upside was the top of this rectangle box here, and that's been met, and the market's fallen from that. So if we find that that box becomes the support, then we will look at this being wave C or 4 here and looking further to the upside. So this particular 2720 here was a real sort of line in the sand for this count, and not to say that that's over here, but anyway, we bear that in mind. The other count that we need to have a look to now, as it draws it out in this, is simply, I will do it on here as well, so is basically a triangle pattern, and we'll look at this on another chart, but I just want to draw it here first so we're aware of it, where wave C is in this space here, wave D is here, and then wave E here would move down into this point with wave 4 being here. So a triangle pattern, so an A and a B and a C and a D and an E here. Because this is really quite difficult to count within here, there's a couple of variations that we can use for this. So we'll also bear that in mind as well, and I'll just put this back here for the time being, and I'll just put these over to the side over here, and I'll just save that so they're there. But on this particular intraday chart here on the 6-hour chart, this is how it's counted here, as an A and a B and a C and a D and an E. So we're going to have to work with that, okay, as well as the more bearish count in this case. Yeah, so wave E here would pull down to the 61.8% from wave C to D here, pulling back 61.8% coming into this space here. We'll probably have some sort of idea as it moves down into this space what this pattern looks like here. So we're looking at a simple A wave in 5 waves, B wave in 3, and a C wave for the E wave here in 5 waves as well. It could get more complicated than that, but look, we just need to bring this into the fold at this particular stage. This particular move up through here, you know, when we look at this move that's come down through here, it's nice if we have a 5-wave move down through here, because then it's helpful, but you know, at first glance it looks like it's in 3 waves. So just to make sort of things clear, if this low here gets breached, then we know that we're in a bear market, we're in a bear trend at that particular stage there. However, on the intraday, it does count that the move down here will continue. We'll be looking at that. So let's just go in and have a look now. This is where we're up to here. So with this particular count here, we're looking at wave B up here, all of this for wave 1, an A and a B and a C here for wave 2. And we're looking for the market to move down further. In fact, we can be triggered on this particular low, which we'll look at in more detail in a minute. But we've also got a situation where we can have this wave 1 over here as well, because all of this is a little bit messy in here. So we can have a WXY count within all of this. But I like to keep things very simple for this. So pretty much I'll leave this. Well, in fact, this wave 1 would actually be in here on this low here. On some of the indices, I think the DJ has got this as an 1 and 2 and 3 and 4 and 5, and I think some of the leading stocks in on the NASDAQ have got this as well. So it's okay to put that wave 1 here, I reckon, and have this as an A, B, C. But anyway, we're at our target here, and our main job now, really, with this here, if I can move into say a 2-hour chart a bit smaller here, you know, looking at this here at first glance, it looks like we've got an A and a B and a C here. So it would be helpful if this low here gets breached. So if you're looking for a safe trigger, then that will be it there. But also I must point out too that this 2650 area here is going to offer some support here. Okay, don't need that. Well, there's a little bit more to it, but in a nutshell, it's halfway between the 700 and the 600 here, so it's like a midpoint. So it is important, and it will play out as well within all of this. So our job now is to count this here. It's kind of interesting because it looks like it's in three waves. There's an A and a B and a C here, and if that is the case, then it can simply move up from there. But we couldn't go long unless we had, if I can just copy one of those, we could go long above here. Okay, so that's where that is. So if that moves up through the 2700, then you can go long from that point. We'd been triggered in here on the last time we spoke, through here on this low here, or perhaps even that one further up in here. We would have discussed that point there. But that's where we are at the moment. So you can add to shorts or take new shorts from here, but just be mindful that any move down here we would see a bounce in this particular area here. I mean, there's a good case for this being an A and a B and a C here when I look at Amazon, for example, here, because with Amazon we can count this as an impulse wave to the upside and a corrective wave back here. You know, and perhaps this is an A and a B and a C wave here, and we've got to put the B wave over here in the end. But as it stands at the moment, this looks like a nice strong third wave, doesn't it? So it would be logical to put this as 1 and 2 here, and 3 here, and 4 here. And this fourth wave pulling back here, if I can just go into a tick chart here, has pulled back to the 38.2% retracement level. So from wave 2 low here, and the move up here to the 3, we could look at this as an A and a B, and then 1 and 2 and 3 and 4 and 5 here. I mean, Amazon's important, so is Alphabet, Google, so it's right on the 38.2% retracement level here. It may come down a bit lower, but it settles for a nice ABC pattern here. So, you know, I can't throw this out just yet here. So, I mean, we were expecting a turn because we had the third wave in up here before. We could turn bearish, say, with a breach of the 1500 area here, but there's no rush to short this now, because what will happen is that, you know, even if it does move down, I can't draw on this side, but even if it does move down here, it's going to bounce back up here first, you know, and then it'll move down through here. But taking out that low here would signify that this count is wrong here. Okay, so I mean, you know, we need to be proved wrong here first. You know, we need to gather that sort of evidence. So this is one of the strongest stocks, and I have to say Alphabet's exactly the same. Okay, so there's two stocks there that are quite strong. Also, Apple's always a bit of a contender on the NASDAQ, and we looked at the move here last time we spoke, or previously, I don't know when, but we looked at this here, moving up here. So this move down here, this first move down here, we talked about being breached, overlapping this structure here. So we knew that this structure was weak here because it had already broken this with Apple. This is Apple here on a daily chart, and it already broke that there. So and that's followed through nicely from here. So I would expect this to move down even further now for Apple. Okay, so Apple's weak. Amazon and Google, Alphabet can be weak, but they need to get past that fourth wave situation here. Okay, so stocks are doing slightly different things. Yeah, I'll just go into. I've got a bullish count. You know, as I had the bullish count for the Amazon, I've got a bullish count for the SP 500, which is having this as basically an A and a B and a C here, and moving up. So we'll just leave that for the time being, and we'll go into we know where to go long up here. Okay, otherwise we need to be looking for short trade opportunities. So the way that I see the short trade opportunity, or this here. So we've had our top in here. This was our target that we were looking for, the 2720 area here, and it leaves us to count this here. So I just want to go through this with you a little bit here. So first of all, I can just remove the green ones out of the way a little bit. Sorry about that. Bit of housework. So from the top here, I can count this down as 1 and 2 here, and then all the way down here for basically for 5 waves coming in here for 1, and A and B, C for 2 over here, down for 3, 4, and 5. Now it does leave the 5th wave a little bit short here, but that's okay. It's like it's not a leading first wave; it's sort of an ending first wave. And then we're looking for an A wave and then a B wave to come back down and cover this gap here, and then wave C to move up here to the 61.8% mark. So, you know, if the market moves above the 60% mark on the 2700, then we can go long from that point, okay? So I'm suggesting that, you know, you may already be short, and that's fine, and we also want to copy that and put that here, and of course we may be able to get a better entry again than this current low here by, if I can just draw over here, so let's just say that's a low, we get an A and a B and a C wave here, then we can put a green line through here, and then take that short on that side there. That would be the way to play that out. This move coming down here, you know, it's okay because wave 1 is the longest, and then wave 3 here is shorter, but then wave 5 is shorter. So just to sort of bring that in, I want to bring the cash, this is the cash market in here. So with the cash market here, this will be a 5-minute chart, I think. So the S&P 5 minutes, so that's 1 day, that's 2 days, this is 3 days. So we've got from the top here, we've got 1, 2, 3, 4, 5 for 1, back for 2, strong 3rd wave down, and then we've got the 4th wave back, and we've got 1, 2, 3, 4, 5 here. So from that high here to that low there, I can count 5 waves very clearly, and then this is the corrective wave coming back up here, okay? It does leave that gap up there, but then the next wave down here is, we've got 1, 2, 3, 4, 5 in here for 1, and then 2, then 3 in here, and then 4, and then 5 here. So we've got this other wave here. If we only had this 5 waves, yeah, and then this corrective move, and then this 5 waves here on this low here, then that could be an ABC correction to there, an A and a B and a C correction there. But then it's moved back up to the 4th here, and it's dropped below here. So what it's done here is, well, I suppose we could look at this as an A and a B. No, that's not right. So, no, oh God, bugger. I have to go in and check that. But the way that I saw it first up, double checking it now, I'll just wait 1 second. Okay, I was just checking on the 1 minute chart on the cash market, but the bias would be that I would be correct in that we'd look at this as 1 and 2 here, and 3 and 4 and 5 here for the 3rd wave, and then the 4th wave, then the 5th wave at this particular point here. So I will stay with this particular pattern that I've got here. So that makes that 1 and 2 here, and 3 here, and 4 here, and 5 here. And we'll look for, let's just allow this to play out in terms of the A wave, the B wave, and B wave coming back, probably covering that gap. It'll pull back wherever that, there should be another high coming in here. I need to check that too, but it doesn't matter. Let's just allow this corrective wave to play out here. And like I said, if I know where I'm wrong, because I would be wrong if the 27 made support here, but we expect it to go up and, you know, very close to it here in this particular move through here. So let's get that. Let's get our setup pattern is this. But if that doesn't occur and it just goes straight up to here somewhere and then just drops straight down through here, make sure that we're short at this point here. So that's it. If you're short already, then keep the stop. If you're short here, then the stop should be above these last highs here anyway, and then look to add on this pattern, or look to add on this pattern, or get stopped out and reverse at that particular point there. But make sure you get a nice support on top of that 2700 too. So if this is the 2700 here as an example, coming up here, the market will touch it, it will pull back, then it will move up through there, then it will fall back, and then it will make an effort to get up there and there. So, you know, don't go jumping too soon, because that's when you'll get caught. Better to wait a little bit and be a bit secure in that position. Alrighty, thanks for tuning in. Cheers.